Good afternoon, everyone. Well, let me start with apologizing first, because we had a bit of a delay due to technical difficulties. But luckily we can continue now, starting with the third conference of the day. In relation with this year's great debate, Europe's alarming dependence on mineral imports, we have invited 3 of the debate speakers. These speakers have a combined background in geological surveys, economic geology and mineralogy. And during this press conference, they will address the question, what can we do about Europe's raw materials crisis? With us are, on the right side, Louis von Beauté, President of the Society of Economic Geologists. We have Richard Harrington in the middle. He's a researcher in mineralogy from the London Museum of Natural History. And right here, Patrick Redmond, Manager Exploration Ireland at Tech Resources, a company from the private sector. And also joining us later, well, they're walking in right now, are Petrus Crispin. He's the Secretary General at Geosciences. And we have Nick Arndt, our EGU Division President of Geochemistry, Mineralogy, Petrology and Volcanology. I'd say let's start.
Good afternoon. Perhaps I would start saying that we are talking about a business of about $600 billion per year. About because, of course, it depends on the metal prices, between 400 to 600 billion. The prices change a lot. From this, about copper makes 20%, 110 billion years. Iron is also a big piece, and other metals are much, much lower. For example, zinc is only around $27 billion per year. Gold is again a big piece, and it's around $80 billion per year business. We're talking here a lot about rare earth elements. Of course, they are extremely important, but in fact, the business of rare earth elements is quite small. In 2009 was around 1 billion. This explains a lot about why we have this shortage now in some elements, because in fact there are niche markets where big companies actually are reluctant to go. We will develop more on that in the next parts, and I would like to start saying that with a, Of course, the crisis is also because of the forecasted demand on metals. Here's a projection with a scenario of strong growth. The question is, of course, if China, Asia still grow in the same way as are still growing in the last years, we will double and multiply by 3 for our present demand of metals. But of course, we don't know exactly, but this needs significant increase in the next years. Often we have the question about near exhaustion, that some metals will run out. For example, in a journal, it was published that in Mining Environmental Management 2 years ago, it was said that in 32 years from now, copper will be exhausted, or zinc 17 years from now. Is that correct? Is that wrong? It's clear it is wrong. This is not the issue. Actually, it's another one, the issue. We are, in fact, a little bit repeating a debate that was held in the 70s, where the previsions of the Club of Rome were demonstrated that the Earth resources are not infinite, but this report had a lot of things which were very good, but on metals were not so good, because, for example, it was written that some metals would be exhausted by 2000, the others by 2050. That was wrong. Why is so wrong? Why so many people think this kind of stuff? problem is perhaps is a lack of education, and we don't know, people often don't know exactly what an ore is. An ore is something which is occurring naturally as a rock, and has an economic value and can be extracted with a profit. But to measure these ores, that is to delineate reserves, we need to invest. And the important questions to be understood is that the companies only make the necessary investment to assure an operation. If they have a big mine with an investment for several $billion, they will assure reserves for perhaps 40 years. But if they have a small mine, which is small investment, perhaps they will just assure reserves for 5 years. So when we go to, for example, the documents of USGS and look for the reserves, what we are looking is what these companies have measured, and it is directly dependent on the investment. Has nothing to do with the geological reserve. For example, you see here the lifetime for two elements, for copper and for zinc. The report of the Club of Rome was in the 71, 72, and you see the effect of this report. Until 69, copper reserves had a lifetime for around 50 years. After this Club of Rome report, governments gave money for exploration because they were very worried, like now, about shortage on some metals. The result was that the reserves for copper, for example, increased to 72 years. And for zinc, from 16 to 40 million years, 40 years, not million years. What did happen later was quite catastrophic, because in 81 companies had too many reserves, and they stopped exploration. Another result of that is that the prices collapsed. Developing countries which were selling metals, they had much less revenues. Now we are returning to normal in certain moment, well, not completely, because we see that in 2001, actually we had in copper and figure on reserves too low, only 27 years, which actually was very low. Now it's recovering on that. And for zinc, for example, is 20 years. Why zinc has a less lifetime is just because usually mines are smaller. I have other points to say, but I will pass to my colleagues to complete these topics.
Okay.
Thank you very much. Good afternoon, ladies and gentlemen. So to briefly introduce myself, I am Petrus Crispin. I'm in charge of the strategy, corporate strategy of BRGM, that is the French Geological Survey. Our activities are not only a state survey, but also we provide services, consultancy to private sector, and we work a lot in support of the French government and also of the European Commission. I have been personally representing BRGM in all the works around the raw materials initiative. I have a very few slides. Yeah, thank you. So I'm just to address very briefly, because these are very complex issues, and I'm sorry for being late, but I'm just arriving from Paris. What are the future mineral resource demand? What can we say about the future mineral resource demand, and what are the major challenges? So let me take the case next, the case of iron ore, which roughly represents 80% in tonnage of all the produced metallic minerals. You see the curve of the world production up to 2009 based on USGS data, and then an extrapolation of what would be the demand for the forthcoming years, just taking a 3% compound average growth rate, which is a very modest figure, because over the last 10 years, the compound average growth rate of iron ore production was 7% per year. So just taking 3% per year up to 2050 shows clearly that we will have to produce more iron ore between 2010 and 2015 than from the beginning of humanity to 2010. That is an absolutely enormous, there is no word for it to describe a challenge for all of us, for humanity, because that means a lot of energy, that means a lot of water, that needs to discover a lot of ore deposits. The next slide is taken from Rio Tinto. Sorry for advocating a mining company who is competing my neighbor in some aspects, but I like very much that slide. Also, it may be a bit difficult to read from a distance, but I hope you can get access to those slides. Those are their forecasts for copper, aluminium, and iron ore production up to 2020. So, to keep the long story short, what they say for the geologists among us is that it will be necessary to discover one Pilbara system, which is the Western Australia iron ore deposits every 5 years, and one La Escondida, which is probably the world's largest porphyry copper deposit every year, to feed such an appetite for raw materials. And let me tell you that recycling, reduction of minerals consumption, reuse of some parts which can be still used in a new product, they will alleviate a bit those issues, but they won't solve everything, because the driving engine behind that is just the growth of human population. We are 7 billion nowadays. We are going to be 9 billion by 2050. And I don't know many humans who don't dream at some stage about a house or, say, public transportation or a bicycle and so on. So, again, here I will keep this long story short. Please take note that most of the reserves of many of these minerals critical to our economies are located in developing countries, in emerging economies, in economies that have a GDP, a gross development national product, of less than 8 euros per day and per capita. So now, mining industry is a very complex industry. It needs very responsible companies to properly address the environmental and social issues that may arise around mining. It needs also very well-organized government agencies like environmental agencies, geological surveys, to make it possible for the mining sector to develop in any sustainable way. How can you imagine that countries as poor as these can pay properly people to work in their environmental directorate or in their geological survey? The second question I would like to very briefly address is the world going to run short of minerals? You probably all heard about peak oil, and you may have seen that there are some papers around about peak copper and peak whatever. My personal view on this is that there is not yet any foreseeable issue with a shortage of geological resources for metals, because contrary to petrol, hydrocarbons, you cannot find hydrocarbons at great depth because the temperature will be too high and oil and gas reserves will be destroyed by the temperature. That's not the case for copper, iron, and so on. You can find them at probably any depth. Now it's a problem of technology, it's a problem of price, of course, accessing deeper resources. The main issues are accessibility to these minerals and metals. As I just mentioned, many of them are located in emerging countries. So there you have issues like poor governance, which is a powerful deterrent to investment needed to unlock all these wells. it's a problem of growing resources nationalism. You may have heard about tensions last year in autumn between China and Japan because the Japanese authorities have seized a Chinese fishing boat which was in their territorial vessel, and in retaliation of that, China stopped exporting rare earths needed by the Japanese economy for a while. And it was quite an issue, and it made plenty of headlines in many newspapers. And you'll have more and more of that. You will have very unstable, deterring regulatory frameworks in many countries because it's very difficult to foresee how their regulatory frameworks may evolve. What about investing in Ivory Coast or in Libya nowadays? Will you put your pension money there? Maybe, if you like risks, it's a good idea. You may face problems with a poor geological database, including in my own country, in many European countries. Our geological surveys have been underfinanced for the last 30 years when it comes to looking for metallic minerals. It comes to insufficient investment, a lack of social license to operate. You have a situation where the minerals are either in poor countries and with many difficulties around them, or in rich countries. In rich countries, no way to open a mine, not in my backyard, not in my lifestyle, and not in my election year, please. I love to enjoy all the services, all the amenities provided by minerals and metals, but I certainly don't want to be embarrassed by any kind of mining arising near me. Let the Chinese or whomever do it. This is totally unsustainable attitude of us as consumers. We cannot continue expecting minerals coming from cheap, from countries exploiting labor at very low wages or under very poor environmental conditions. That is unsustainable, and we are all responsible for that as citizens, as consumers. There is a growing volatility with metal prices. Last year, several rare earth elements had their prices multiplied by 2,000%. If that is not volatility, I wonder what volatility means. And this is related partly to the rapid development of very sophisticated financing instrument called exchange-traded commodities, exchange-traded funds. These make you, it's easy for you with a few clicks via internet to buy virtual gold, virtual copper, and so on. But this all adds volatility to the markets, and metal prices become unforeseeable. Then energy and water are issues, and lack of human resources, because many people with knowledge in mining and minerals have about my age rather than being young, and that is certainly a big issue. So finally, the last point, what are critical minerals? So critical minerals are those who are important to the economy. Here is the so-called Mendeleev table with colorful highlighting of all metals that are important to just the energy sector. So you see, just taking the energy sector as an example, you see that almost every thinkable element in the Mendeleev table is of great importance to the energy sector. No windmills without rare metals, no photovoltaics without gallium, selenium, tellurium, and so on and so forth. Now, what is needed? What is needed is to have a strong partnership between the state, public authorities, and the industry, private investors. You need two to dance the tango. The state needs to create the conditions that attract the investment, provide a stable, reliable, foreseeable regulatory framework, provide the geological data. Investors have no time to lose to look throughout all Austria or any other country where is their mineral potential. That is the state's duty to do it, to provide that information to the private sector, and then private sector will focus on a more narrow area taking a permit. So, and here are the various steps, again, needed to turn a geological idea to a producing mine. There are numerous steps, and it takes about 10 to 20 years for a large-scale metals deposit to move through all these steps. And you have indications of costs. It can cost up to several tens of millions euros just to do the preparatory studies prior to opening a mine. and it takes years, and then you cross fingers that the regulatory framework doesn't change during that time and doesn't ruin your project. Here is just a short indication that is from a study from Bloomsbury. That's my last line, showing the effect of volatility on financial instruments, derivatives, on the copper price. The blue curve shows the effect of ETCs and ETFs on the copper price, while the red curve shows that's a model, what should the copper price be just if you take market fundamentals like offer and supply, demand and supply. So thank you very much.
Good afternoon, everyone. My name is Patrick Redmond. I'm a geologist and I work for Teck Resources, Canada's largest diversified miner and metal producer. I should say up front, I'm here to give my opinions on what I believe to be the opinions of the industry. I'm not necessarily giving the opinions just of Teck. What I want to talk about this afternoon, what I want to give you is a perspective from the minerals exploration industry and the mining industry on supply issues in Europe. The first point to make is that Europe is well endowed with natural resources. And this particular map, I've selected just a few, including copper and iron and nickel. You will see they're not uniformly distributed. They occur in various belts that are well understood geologically. You can see my own home country here, Ireland, covered in red dots representing the zinc deposits of Ireland. I'll come to those in a minute. But equally, Sweden has copper deposits and iron ore deposits. The Iberian Pyrite Belt has copper and zinc, so on and so forth. However, European production of metals is small in global terms, and I'll come to that in a minute, and also importantly is declining. And that's, I want to address what I believe to be the underlying reasons for that decline, and then at the end of my talk come to one final slide giving some solutions, I think, to this particular problem. Everyone is talking about rare earth elements and critical metals, and this, I guess, has brought the issue of European dependence on imports to the fore. But as Louise said up front, rare earth elements, they in terms of total value, total volumes, are relatively small in the global minerals industry, but nonetheless they're important, particularly because of their increasingly important role in clean energy technologies, the things that modern society depends on. And this is a plot you'll see in many different forms just showing the various so-called critical metals in terms of their importance to clean technology and supply risk. But it's important to also remember that Europe is also highly dependent on imports for the major metals, right? And these are the metals that have much higher global value. I mean, this is the bedrock as such of the global mining industry. Commodities such as iron ore, nickel, copper, and zinc. And the blue section of these pie charts shows European production of those metals, and it's uniformly small, uniformly declining. And in fact, zinc is probably one of the best. I'll just show you a little bit more detail on the zinc story. And remember too, these commodities are essential for life as we know it. Steel, zinc for coating steel. Every car has on the order of 10 kilos of zinc coating its body. In terms of wind turbines, you need steel, copper, zinc, and their critical metals, the rare earth elements that I described in that earlier slide. Here is a little bit more detail on zinc production in Europe. And I could show a similar slide for each of those other commodities. But you can see Europe produces a relatively small percent of total world supply, yet Europe and European consumers consume a large part of the supply. In the case of zinc, it comes from a number of different European jurisdictions, and Ireland, my home country, would be the most important of those. But within Ireland, it is declining. So why is metal production, mining, declining in Europe? Now there are many reasons you could put forth. Social license to operate, such as what Patrice has outlined. Not in my backyard attitudes. Just available land, the perception that environmental regulations and the permitting process is onerous. And all these factors feed into a perception of Europe as not necessarily a good place to do exploration. It takes too long, too hard to find things, too hard to permit them when you do find them, etc. And exploration funding, exploration dollars or euros, will basically flow to countries where companies think they can make discoveries and ultimately bring them into production. And so for that reason, exploration funding flows to places outside of Europe. Now this is a very interesting plot. It shows total exploration financings for the junior sector. Now this is the sector of companies that are small. They're not necessarily producers, or they're small producers. They're not big mining companies such as the company I work for, such as Teck. But over the last 10, 15 years, it's the junior sector that raises and spends the bulk of exploration expenditure around the world. It's outpaced the major companies. To the tune of, in terms of dollar amounts, about 23 billion was raised and spent, raised in 2010. Now I'll draw your attention on this plot to the first of the columns here, which represent expenditure in Europe. And you can see, firstly, in recent years it's declining. And it's declining in absolute terms. And it's also declining, very much declining in relative to global spend. And this is because exploration managers, companies, are just choosing to spend their money elsewhere. Another representation of this trend, this pie chart shows countries, the percent of exploration dollars spent globally by countries. 67%, and this is 2009 data, 69% of the 2009 spend was spent in 10 countries, and none of them are in Europe. Countries like Canada and Australia are the largest. So again, exploration companies are just simply not spending money in Europe. Another thing to consider is what exploration companies are actually spending their money on in terms of commodities, and this comes back to the concept of critical metals. It's pretty clear when you look at the global numbers that the bulk of exploration dollars go to gold exploration. That's because companies can get a faster rate of return. Gold deposits are generally easier to find in a global sense. Second would be base metals, should be copper, zinc, lead. Diamond exploration is significant. Platinum group elements, metals are small, and then everything else is in that other category. So another reason why these critical metals, rare earth elements, are critical at the moment is basically very few companies have been spending money exploring for them because it's essentially a niche market. So to conclude my comments, I've put up 4 points, and we can come back to these if you like during the questions, as to what can Europe do to address this situation. Obviously, the most basic thing Europe can do is to encourage mineral exploration within Europe, as other countries have done and continue to do. Countries such as Australia and Canada are particularly successful in encouraging exploration activities to happen. And this could be done, particularly for strategic commodities, strategic metals. You can do this for a whole series of initiatives. There can be tax incentives, or there can simply be governments and geological surveys spending money on large regional scale surveys, geophysical surveys, data that private companies can then use to zoom in on areas of interest. And study after study around the world has shown the value of these surveys. For every euro spent on a survey like that, multiples will be spent by the private sector following up on the anomalies created. You just need a government with a countrywide view to come in and say we need these big data sets. I think it's also important that Europe develop a comprehensive Europe-wide mineral inventory database. There's been some attempts to do that. There's an organisation called ProMine who are working on this. And this is a very basic data. What is the mineral inventory of Europe? I mean, our knowledge varies a lot by region. And by knowing where these mineral deposits are, or where they might potentially be found, it will ultimately prevent what I'm referring to as sterilisation of resources. And you see this in multiple countries. So a deposit exists. Maybe it's not economic now. This could be a metallic mineral deposit, or more commonly, it's aggregate for building. And because it's not really on the radar screen, it can be, that land can be used for something else. Somebody can build a motorway on top of it, or build a house, and effectively sterilise that resource that's in the ground that could potentially be mined in the future. So I see a lot of value to having this a detailed and comprehensive Europe-wide mineral inventory database. More industry academic research needs to be supported. Research and innovation in both exploration and extraction technologies. I think Europe has a lot to offer in this regard. And then finally, the solution to this problem is never going to be just within Europe, as other countries have done in recent years and over the past number of decades, countries such as Japan and more recently China. You have to secure supplies from other countries. And this can be done through supporting the private sector or trying to develop the industries within other countries, helping them with the regulatory environment, etc. Thank you.
Okay, many thanks to my previous colleagues speaking. What I'm hoping to do is perhaps wrap up some of the ideas that we've been hearing, and perhaps put a little bit of seeking some ideas that maybe academics might be able to contribute to this process. I'm actually based at the Natural History Museum in London, where there's a research group that work on origins of mineral deposits, which is what I look after. Excuse me. We've heard a lot about the security of mineral supply, and I just really wanted to summarise, perhaps, with a few pointers to people have worked on these issues, and it's quite clear that as mature economies, we're moving from cheap and easy extraction to expensive and difficult times. And I think that's come clear from all the presenters we've heard. There have been some suggestions that we're going to run out of metals, and we've heard that, some addressed by previous speakers. But others are suggesting that technological innovation will get us around the supply issues. And we hear glib things about development we didn't stop using flint axes because we ran out of flint. We found something better to use. So it might be a bit glib, but that's the kind of thing that we mean by these innovation. But there are some other issues coming on the scene, like the environmental limits, which might eventually curtail supply. There may be society pressures to actually control, perhaps, use of commodities, which is not something we can put into an economic basis at the moment. Okay, so the major commodities, we know they're multiply sourced, so there are probably not too many issues. And a lot of mining commodities are actually byproducts. So again, those are very difficult to quantify how they're running out, because they are linked to the production of major minerals. But some commodities we can recognise having limited potentially vulnerable and perhaps politically, ethically undesirable supply chains. We can think of things like blood diamonds we've heard about and been the subject of a film, but other elements like tantalum, niobium, where they have been traditionally sourced from areas that have benefited, conflicts have benefited from the trade of these minerals. And then rare earth elements, which we've heard about, and I'll talk a little bit more about control there by China, and even platinum group elements, which are obviously used in everybody's car. But some issues also, there are the things of, this graph's quite interesting because it shows something about the corporate concentration of mineral production. So what this graph helps to show, it's produced by the Geological Survey in Germany, is the further up the graph you go to the right and up, the fewer diverse companies there are producing that commodity. So basically things at the bottom left, there are lots of diverse supplies. So the idea of a monopoly is probably not something we need to consider. But increasingly, as you go to the right of that diagram, those commodities become more and more controlled by a smaller group of companies, and it's more subject to things like cartels and perhaps even monopolies of supply. So these are things that these elements that we up in the top right, and we've heard a few of those talked about. But you can see some of the major elements like nickel sit quite high up those graphs. Nickel supply is controlled by a few companies, so therefore these prices are much more sensitive to single company supply issues. For example, strikes in mines, maybe conflict that moves a mine out of production. So these are considerations. There are some degree geographical monopolies. We've heard about China supplying most of the world's rare earth elements, which are high-tech metals needed largely in the electronics and electrical industries. But became political when a US factory supplying rare earth magnets to the US military got bought out by Chinese interests, and the American government woke up to this and provoked a political response. But bearing in mind, China actually only has 37% of world rare earth reserves, so there are plenty of rare earths to find elsewhere. But often the time scale of putting those into production means there's a time lag, and that's what the situation we're in at the moment. We then move on. There's some ethical issues in some of these minerals. We've heard of blood diamonds, and trading of metals from places of conflict could be problematic. In the past, we had unregulated supply of things like tantalum from Rwanda and DRC. Companies have actually been very proactive in changing that. But maybe we're at the point where we might need a sort of a fair trade initiative for some of these metals, so that we do know, so the public know where they're being sourced. And in fact, the US have brought in this Reform and Consumer Protection Act, which obliges producers to announce if if any of their products contain metals coming from conflict areas. And lastly, in this area, there are carbon issues. This is a graph here. It's quite an interesting one produced from the Australian mining industry. Basically, it shows on the bottom scale there, we have the grade of gold in grams per tonne. So that's the quantity, the richness of the gold deposit. So basically, the more rich the deposit is, it sits along the left. And the poorer in grade sits to the right. And what we have on the y-axis is the carbon cost, or the CO2 cost, in producing a kilogram of gold from each of those deposits. And you can see when the gold grade is very high, the carbon cost of production is relatively low. Now, it may come to the point, at some point, where society says the carbon cost of production might be too high for you to even contemplate mining it. At the moment, that's not in anybody's bottom line. Obviously, countries have got carbon, looking at carbon issues, but these are things that might come up in the future. But it's not all doom and gloom, because I don't think we've fully characterised and tested all the potential resource streams for these different commodities. And I'm going to talk a little bit about lithium, which is currently sourced from Playa Lake brines in South America. And the picture there of James Bond, he was actually on one of these lithium Playa Lakes in Quantum of Solace. But this is one of the major areas of lithium production. But actually, lithium can be produced from any of these 14 minerals as well. And currently, We haven't evaluated all of these as potential sources. A new deposit discovered in Europe in 2006 actually led to the discovery of a completely new mineral, completely new ore mineral that had lithium and boron in it. And it just shows you that this major world deposit was unknown to science, and in fact the minerals that contained the metals of interest were unknown to science. So there's still things that science is needed to understand these, because this is potentially a major lithium and boron source within Europe. And if we take it to the full extreme, it's down to cost of all the extraction. If things get really tough for lithium, you can get lithium out of seawater. And actually the cost of production of lithium from seawater is only 3 times the current market price. So if we think of the price hikes in oil, if that happens to lithium, we've got a limitless supply. You're just going to have to pay more for it. So I think this is something to bear in mind, that even in these particular metals, there are ways around looking at the supply issues by some innovative science. And we're seeing this for nickel, where global nickel production currently is mainly from sulfide ores, but there's a huge resource of lateritic nickel ores. These are ores that are due to natural weathering processes, and potentially this could be a new, this could supply all the upgoing nickel needs. And this, because it's different mineralogy, it needs different processing technology. We need scientists to work on these issues. So I'm just going to leave the final slide there for you to read. And it's really to say, I think, in wrapping up everything, we need scientists to predict where these new minerals might be, but also, even if there are going to be changes to supply and uses of substitutes, we're going to need to understand the impact of taking those substitute minerals. Thank you very much.
All right. Because we had a delay, I cannot allow too much time for questions. So please bear with me. Hopefully 1 or 2 questions, and that'll be all. Well, are there any questions?
Holger Crocker, would you advise us to ignore all these ages or all these figures you give for reserve years, because they change over time from year to year? Should we better ignore it?
It's not ignoring, but understanding what it is. It's just, as I explained before, it means just what is dependent on the amount of money that the companies have invested. And if it's a big mine, they will invest more. If it's a small mine, like for example for gold, they will have return in a few years. They will not assure reserves for more years. So we have to understand them.
Just to add a word on that, for the press or for external people, it would be interesting to look how these reserves change over the years. Are they decreasing or increasing? What's the dynamics behind it? And if I look to copper, for instance, the very good news is that if you look at how many years of copper reserves we have now compared to 10 years ago, we have much more copper reserves now than we had 10 years ago. That's because the price of copper went up, also because there have been significant discoveries. So there is no signal looking at the reserves towards exhaustion. You cannot never take reserves and divide them by the number of years of production and say, oh, wow, in 30 years we are running out of copper. That means nothing.
Yes, Randy Shostak, reporter with EOS at the American Geophysical Union. I wonder if some of you can address why are so many country geological surveys underfinanced? Dr. Redmond, you mentioned that they more than pay for themselves, for instance. Is this short-sighted? Is your message getting through to various countries?
Well, I think with respect to a long-term view of mineral exploration, geological surveys for sure are underfinanced. Over the last couple of decades, it's become somewhat unfashionable to fund mineral exploration projects. For example, in Ireland, there was a proposal to carry out a geophysical survey of the entire country. It was called the TELUS survey. And in the end, it was only carried out for Northern Ireland, funded by the UK government. It was never funded for the rest of Ireland. Again, purely a funding issue. So I think you may see some change now with this renewed focus on supply issues and supply concerns, but it has been a long-term decrease in funding.
Yeah, I think if we get one of those issues there, I think the underfunding may also be because very much it's been the funding for this kind of research has been given to different institutions, and I think what we really need in the resource sector is some more vertically integrated types of research where we're not only looking at the national inventories but also the national manufacturing capabilities, because so much of industry in Europe is dependent on these raw materials that we don't actually join it up. The fact that you need to find these to put them into the, for example, if you underpin the car industry in France and Germany, you need to get the supplies of iron ore in there. And I think the geological survey, part of for the German and French economies, ought to take into account the fact that their industry need those raw materials if they're going to continue sustainably. So that should be written into that. And I think it's at the moment those kind of things are detached into individual scientific briefs and perhaps should be looked upon in a much more vertically integrated way.
Being from a survey, the French Geological Survey, I can add a word on that. I would say for 30 years, since the second oil shock, the Iranian Revolution, the metal prices went down in average, historically speaking. Most metal prices were very depressed over the last 30 years. They only resumed very strongly since 2002, 2003 due to the rapid growth of the Chinese economy. And during all that time, what happened? We had a period of extended liberalization in Europe. Get rid of the state. Get rid of all those guys, useless guys, sleeping somewhere in plush premises and providing nothing, just generating paper and silly ideas. So get rid of the surveys, get rid of the state at random. And now all of a sudden the fire is in the house and everybody looks, where's the fire brigade? There is no more. So that's certainly the issue. A general belief was that copper, for instance, was coming from the newspaper. Good news for you, from the press, because you look to the New York Times or Financial Times, whatever, Wall Street Journal, and you found a table there with the copper price. You gave a ring to your broker. You agreed on how many tons you wanted to your warehouse. You paid the price, and that was it. Why to ask yourself kind of silly questions? Where is this going to come from? Will there be more in 20 years from now, and so on? No way to think about that. Just in time, zero stocks. That was the mantra of those times. These times are gone, and they're gone probably for good. And I can tell you, because we have very close contact with the French industry, you were just mentioning car manufacturing industry. We work, for instance, when one of the larger French car manufacturers, that they are really concerned about metallic minerals, and they do ask us to study for them what will be the copper market situation, the lithium market situation in 20, 30 years from now, because now they start thinking really strategically and long time. It's more than time for them to do it, but that's a big change in mentalities, and we are going to see more of that in the coming years. We are deep in a crisis.
All right, because of time pressure, I'd like to end the press conference now. We're having a 10-minute break, and then we'll continue to the next press conference. All right, thank you for your attention.